We're only 14 years in. I mean, the next 1.5 million Bitcoin will be mined in the next 100 years, right? We already have 90% more, like I think it's like 93% of the supply or so is already in circulation. So we haven't really seen what digital scarcity is because there was always such a high inflation rate. And the current inflation rate of Bitcoin is more or less similar to that of gold. And after next halving, I mean, we will actually have an inflation rate lower than gold. And I think because this available supply is now finally shrinking, Bitcoin truly is becoming more scarce. And I think it's possible that next cycle we're going to find out that maybe the diminishing returns theory is not the right way to look at things. There's a relatively high likelihood that the returns of the next cycle might be somewhere in between the past cycle and the 2017 cycle.
The Blockware Marketplace is super cool. Basically, Mason's firm already helps investors and institutional investors on Wall Street get into Bitcoin mining with his giant data centers, but he wanted to make it even easier for the average person to get into this. So now with the Blockware Marketplace, with the click of a button, you can buy your own Bitcoin miner from the comfort of your own home and have it instantly start mining for you straight into a Bitcoin wallet of your choosing. On the Blockware Marketplace, you can see a bunch of miners for sale, you can see what the miner is, the price, the data center location that the miner is located in, the hash rate, the estimated revenue you're going to be making based on the current price of Bitcoin and stuff, and there are miners in all price ranges listed on there right now. Once you see a miner you want to look into more, simply click on it, and then you can see the serial number, how long it's been online for, you can see charts of the miner's historical performance, and once you're ready to buy a miner, simply click buy, follow the instructions, and then that miner that is already online in their data center will be instantly assigned to you. And that's it. You are now mining Bitcoin, getting all the benefits of mining without ever having to do any of the setup or maintenance yourself. So go to marketplace.blockwaresolutions.com to take a peek at all the miners that are listed for sale right now.
Hey everybody, welcome back to the Blockware Intelligence Podcast. This week I have on the Rational Root. Rational Root, welcome.
Thank you so much for having me, Joe.
Yeah, absolutely. Been following the charts that you created. I think, many people in the audience may have saw you on What Bitcoin Did podcast. Maybe they didn't, but let's jump right into it. Your famous chart that I think is becoming really popular this year is the supply available for trade chart. Mm-hmm. I guess for the audience that may have not seen this yet, what does the chart look like? What does it show? What are the inputs maybe? What is this chart?
Yeah, so the supply available for trade. Well, if we think of scarcity in general, so one way to view scarcity is by thinking Bitcoin is 21 million Bitcoin. That's the hard limit that we have set. But if you want to narrow that down, you could say, okay, but there's only 19.5 coins in circulation, 19.5 million. So that would be a better way to look at current scarcity of Bitcoin, right? But can we narrow it down even further? And if you think about the HODLers in general that take Bitcoin off the table, so many people stacking sats these days, and they put all those sats in cold storage, and so if you think of that all that Bitcoin that is basically taking off the table, then what is left? Is actually the Bitcoin that's more available for trade, and so that is another way to narrow down Bitcoin scarcity, because the HODLer group is basically a group that is just buying at a more or less linear rate in Bitcoin terms, and so those sats are just taking off the table constantly. And then if we think of bull markets in Bitcoin, that's usually when new hype comes in the market, and those are kind of new people. Maybe they become a HODLer and they become part of this group. That's kind of the linear growth in Bitcoin terms of that group. But when they come in, so new demand basically coming in, and we see it with every bull market. Basically, we have these exponential increases in price. That's because it's an unsustainable amount of demand that's coming in. So that's why we have these high peaks suddenly, and Bitcoin crashes afterwards. But that demand is very different from the HODLers. And so if you think of when those people come in, how much Bitcoin is actually available for them to absorb, and that is basically so the Bitcoin that is in circulation, so the 19.5 million, minus all those Bitcoins in cold storage. And so what is left there is the available supply. And that is more or less, between 4 and 5 million coins of those 19.5 million.
Yeah, I mean, this chart's awesome, and I think you explained it very well. And to me, it's exactly what Bitcoin is, right? Like, Bitcoin is long-term savings technology. So it's very reasonable that a lot of coins, a large majority of the coins, are just like not moving, held, and there's like that small float that's kind of like really available, and that's kind of like what's influencing price. I guess is
Exactly.
that fair characterization?
Yeah, you got it right there. Yeah.
Yeah, and I mean the chart's crazy because like I'm looking at it right now. Like, we had the 2011 bull run where almost no one was around. Then we had 2013. Then we had 2017, and like during the entire time, which will display this your chart on YouTube for the podcast listeners, but during that entire time up until early 2020, the amount of supply available for trade is increasing. And I guess it kind of makes sense because there's a lot of Bitcoin being mined like during the quote unquote early years. And then now once we like hit the third halving or March 2020, like one of the two, like that supply available for trade has been going down. I guess, how do you think about that? Like, why did we see, such a, I guess, uptrend in supply available for trade in Bitcoin terms, up until the third halving?
Yeah, so maybe we should start with just explaining some definitions here, because so there's different ways to classify supply, right? Like, so for example, a very famous one, many of your followers for sure know this, is the short-term and long-term holder supply, right? So that is based on time. So we take a cutoff at more or less 5 months, because we see, after 5 months, coins that are on chain, they are really less likely to be spent. So that's a fair way of saying, okay, this long-term holder supply is kind of also, you could see it as a proxy for this group of HODLers, right? So it's basically the Bitcoin that goes in cold storage. They all become long-term holder supply. Another way to look at supply, or at this HODLer group, is by not looking at this time difference, so not looking at this cutoff of 5 months, but we can also look at behavior. So what is their spending behavior? And it's possible to cluster addresses on chain and look at their spending behavior. Now, a person can be multiple entities, because maybe he has a cold storage wallet, and he has just a hot wallet, and so there's one person can be many entities, but it doesn't really matter. So the thing is, we look at all these entities individually, and we say, okay, how much does such an entity spend? And if they spend, for example, less than 25% of their holdings, then we could say, okay, this is an entity that's really fairly illiquid, right? It doesn't really, like, there's a lot of Bitcoin going in, but there's not much Bitcoin going out. So that's what we call illiquid supply. And so just like long-term holder supply, illiquid supply is another way to kind of measure like how many HODLers, how many coins in the market belong to this group of HODLers. And if you look at the trend of long-term holder supply and illiquid supply, they're relatively similar, and they're two completely different way of measuring them, like how much supply does belong to this HODLer group, but they're very similar in shape. So if the only thing with the time variant, so the long-term holder supply, is that it's a bit more affected by price movements. So if we get this hype in the market, HODLers also then tend to sell off some of their Bitcoin because they want to take some profits. When price goes exponential, even the best HODLers will sell some, will take some gains. Nobody can resist a 10x or something. And so we see in the long-term holder supply, we can see that it kind of goes up in a similar way as illiquid supply, but during these bull markets like 2017 or 2021, you can see that the long-term holder supply has like a a drawdown for a little bit, and then it catches up again. And that's basically also because obviously those long-term holders sell their coins, but they sell them to someone. It could be another long-term holder that just continues stacking, but it could also be more likely, to a new holder, a short-term holder, that later on becomes a long-term holder. So and if we look at illiquid supply, then we can actually, illiquid supply is less affected by these bull markets, for example, these drawdowns. They're not as visible in illiquid supply because obviously when someone new comes into the market but just starts stacking, but he starts doing it in a bull market it's not, since illiquid supply is not time dependent, as soon as this person does not spend any of his Bitcoin, it will be marked illiquid, so therefore illiquid supply has a bit more a continuous trend that long-term holder supply is a bit more affected by price movements, but they're more or less at this point in the cycle, they're more or less at the same height. We have more or less just as much. There are 14 million coins or so are or a bit more. They are marked like long-term holder and also kind of illiquid. So that shows. I mean, at least that gives me confidence that the measurement to kind of look at this long-term holder group, of this HODLer group, I should say, that is a fairly good way to measure this group. The rate at which this is growing.
Yeah, no,
I don't know if
awesome.
you.
I mean,
I don't know if you have any questions about that or.
Pretty much. I mean, completely agree. It makes a lot of sense using like those metrics to like analyze, holder behavior within Bitcoin. And like, it does make sense. Like one's time dependent, one's not time dependent. And it's cool that they're now kind of matching up and showing like a similar amount of coins are quote unquote available.
They usually match like all the way through, except for those bull markets. Then we get a temporary drawdown in long-term holder supply. But for the rest, they kind of match up. And then after such a bull market, it again catches up because obviously those new short-term holders that come in the market, they become long-term holders, and so it catches up again to kind of to the similar path that illiquid supply already was on. So and why is this important? Because the illiquid supply are actually the coins that I talked about that are taken off the table, right? Those are the coins that are like put in cold storage. And so if we look at the circulating supply minus those illiquid coins, then we kind of get the available supply or the remaining supply that's kind of more available for trade, and which is more especially in a bull market, that is the supply that is kind of determines more what happens to price. And so the thing is, so the rate at which this illiquid supply is growing, we can look at the rate of the growth rate of a liquid supply versus the new supply issuance, because as you mentioned, we already have 19.5 million coins in circulation of the total 21 million. So in the beginning, we had a lot of inflation, right? We had a lot of coins entering circulation. We started with 50 Bitcoin every 10 minutes, then 25, then 12.5. Currently we're at 6.25, and in 2024 we will go to 3.125, and so a lot of that supply was mined in the beginning, and so there was a very high inflation. So a lot of new coins were entering circulation, but the pace at which this supply became illiquid was actually not able to kind of keep up, with the new. So that's why basically Bitcoin became less scarce until the third halving. If you look at the supply in terms of so the available supply for trade, and I think that's a at least in my opinion, it's a relatively fair assessment. I mean, it is a proxy, and it's difficult to know. There could be errors here and there, so I don't know, but I think the general trend is kind of correct. Maybe it was a little bit before the third halving or a little after the third halving. It's hard to say, if the indicator is exactly right. But it seems to be a reasonable representation of reality, and so I think it's very interesting. If you think about the diminishing returns theory, and I think everyone knows this, the log growth curve in Bitcoin, so the bigger the market cap, the harder it is kind of to move price, and so the theory about diminishing returns makes a lot of sense, especially if you look at history. I mean, the amount of returns that we had in 2011 or 2013 or in 2017 and 2021, you can clearly see that there is this diminishing returns effect. So if you wouldn't know any better, let's say, the log growth curve makes a lot of sense. But if you think about the supply, because price is a function of supply and demand. So if you think about the supply side of the equation, we can see that actually, because there was such a high inflation rate at the beginning, Bitcoin was actually becoming more abundant until the third halving. And since the third halving, we had this kind of inflection point where Bitcoin starts to become actually more scarce. And that is actually for the first time, so in the history, is that we're finally, I think, are going to see what digital scarcity means, because we had such a high inflation rate, and everyone would always say, yeah, Bitcoin is scarce, and Bitcoin, there's only 21 million, but we haven't really seen what digital scarcity is. I think because there was such a, we're only 14 years in. The next 1.5 million Bitcoin will be mined in the next 100 years, right? So we already have 90% more, I think it's 93% of the supply or so is already in circulation. So we haven't really seen what digital scarcity is, because there was always such a high inflation rate. And the current inflation rate of Bitcoin is more or less similar to that of gold. And after next halving, we will actually have an inflation rate lower than gold. I think because this available supply is now finally shrinking, Bitcoin truly is becoming more scarce. And I think, it's possible that next cycle we're going to find out that maybe the diminishing returns theory is not the right way to look at things. There's forces at play. So I can't tell how important is supply versus demand. It's a difficult. It balances out. But if you think, the growing market cap, as I said, is one of those forces that actually contributes to diminishing returns, right? Because the price is higher, more money is needed to move the same price. Bitcoin basically becomes more volatile. The higher the market cap, the bigger, the more people are using Bitcoin, the less volatile, an asset in general becomes, and I think that's a fair assessment. But on the other hand, now, so if supply really starts shrinking, and that is a force towards the upside, right? So we would actually expect more volatility, and we would also higher price increases again instead of diminishing returns, and more volatility. So it's the question remains now, okay, which force is the dominant force, right? And to be honest, I don't know. So I think if we look at available supply for trade, I think starting the next bull market, or after the halving, we might be at an available supply for trade similar to the 2017 cycle. So could we expect the 20x? I don't know. I think because there's a market cap increase, the market size increase, so maybe we won't see a 20x. I prefer to actually remain conservative. So as I said, I don't know. I think it's a lot safer to go with a log growth curve. If you're a proponent of the log growth curve, no one will blame you, right, for being wrong to the upside. But But so it's always a little more difficult with like, becoming more bullish, because, if we are too bullish, then we might be wrong to the downside, which, people are hurt. And so it's, it's not good for, for the status. But yeah, I think there's a relatively high likelihood that the returns of the next cycle might be somewhere in between the past cycle and the 2017 cycle.
Yeah, I think that was really well said, and completely agree. It's like, I would say most people even in the Bitcoin community, like if you're outside the Bitcoin community, you obviously probably don't think that Bitcoin is even going to go on another parabolic bull run. You probably think like the idea of, $200,000 Bitcoin, $100,000 Bitcoin is like insane. Like otherwise you would be interested in Bitcoin, because that would be a pretty massive return from $30,000, especially in a short period of time. So yeah, I think pointing out that, hey, it's possible that we don't see smaller returns next cycle. It's worth pointing out. Like maybe Bitcoin will only go to 100,000, and people will make a pretty great return compared to, buying the S&P 500 or whatnot in 4 years. But it's worth just like pointing this out, that like, hey, like Bitcoin is really scarce, and it's getting more scarce potentially.
Exactly. Yeah, I think, so thinking, to me, it makes a lot of sense logically that, since we had such a high inflation rate, that, we still have to find out what digital scarcity actually means. So, it was invented in 2009, let's say, or 2008, it launched in 2009, but we haven't really seen, because of that high inflation rate, what it really means. And so I think, it might still take people at a surprise. But I think a good analogy also is, so if we look at Bitcoin's history, the 10 years or 14 years, we have seen these diminishing returns, right? We have seen this kind of lock growth curve. And so I like the analogy of thinking of days, like if you start the year and, you would observe each day, and you would think days like are lengthening, right? Like, it depends where you live in the world, of course. If you live at the equator, they're equal. But if you live, in the US, let's say, days are lengthening. And so, if you would get to the summer, and let's just say, okay, from January 1st till the summer, you've been measuring, that would represent these 14 years kind of that we've been measuring. You would see lengthening days, so your theory would be like, okay, we see, lengthening days. But then suddenly, we have this inflection point, because then we suddenly start getting shortening days, So I think in Bitcoin history, the data is only, 10 to 14 years. The first cycle was the data quality was not as good, but we have only had really 3 cycles of data, let's say, that are kind of representable now. And so it's a relatively short time in terms of data analysis. And so I think, the diminishing returns theory, looks only at that short amount of data. And there's, as I said, I still think diminishing returns are also still possible. I'm not saying that this has to be true. Like I could be wrong here. Maybe, there are errors in the indicators, but to me, it looks like that, supply is actually becoming more scarce. If you observe it through on-chain analysis, and so I would think that people underestimate probably the digital scarcity in general. I think they overestimate risk in general. Like there could all be things wrong, because if you think the halving is not priced in, usually why? Because people overestimate risk of Bitcoin in general. But I think they underestimate the strength of actual scarcity. And so to me, it makes logical sense that we wouldn't get diminishing returns based on what I view. But if you don't look at on-chain data, you would more like, if you would just look at price data, you would expect diminishing returns. Like there is no evidence of this. But that's the interesting thing about on-chain. And here again, we talk about the value on-chain of on-chain analysis. I think on-chain is also such a new field, so it's we're still also kind of playing around with on-chain, like what is useful, which type of indicators work, which don't. I mean, if you think of TA, I mean TA has been around for so long, and kind of indicators had to prove themselves over time, right? So RSI or MACD or these type of indicators became so popular because they were actually useful, for so mmany years. And so in on-chain, it's we're kind of still learning, and it's not easy because there's on-chain data has also, you have to play with the data a little bit sometimes to get these indicators because, for example, Taproot now coming into play, or Lightning, Bitcoin that is on Lightning, we cannot really longer see what is happening with that data, so there's an error margin there. Now, Lightning is still a relatively small amount of the total supply, but still, this if Lightning continues to grow, it will be more difficult to analyze this, so.
Yeah, no, it's pretty crazy. Like, I try to think of Bitcoin as potentially unlocking like humanity's true demand for savings, right? Like, I think of like today we save in real estate, but we can always build more real estate, or we save in stocks, and then like there's going to be venture capitalists that and create or invest in early stage companies that try to take value away from the stocks that you're holding, right? Like they're all competing for the future cash flows, and like whenever you hold an asset, there's going to be inflation in that asset. Whereas like Bitcoin, we don't have, like, it's actually programmatically declining in its inflation rate. So it's like, what is society's like true demand for savings? And I think like this is potentially like unlocking, the ability to save. And it's like, in your chart is a super interesting example. Like in the past, it may have been like new coins that were being mined that kind of like hindered the growth of Bitcoin in its bull cycles. Whereas going forward, maybe it's the holders are going to be more in control of, how high Bitcoin goes. And then, if people want to save $1,000 worth of Bitcoin, they want to save 100,000, a million, 10 million, 100 million, $1 billion worth of Bitcoin. Like, there's nothing limiting, I guess, Bitcoin's price except for the holders themselves. Whereas in the past, maybe it was, the miners producing more coins, having to sell those coins to cover their operating expenses, needing more inflows to come in and bid the price higher. Whereas now it's like maybe the holders are in control. Do you agree with that? Do you disagree?
No, I totally agree. That's why I try to measure also this long-term holder group, this HODLer group. I think it's such an important group to measure that rate of savings, kind of, like you could see it as a savings rate. But basically, yeah, they're taking the chips off the table. And so, in the beginning, there was so much supply, joining circulation that the rate at which those chips were taken off the table was not really as significant, but they will become more significant in the future. So that's why I made like the HODL model, which was kind of try to model out. So what would be a reasonable model for this rate in the future of a liquid supply? So that's kind of like what is the rate at which that HODLer group will continue stacking, and so I made two versions of that. Again, I put out a conservative model quite some time ago. Recently, in the What Bitcoin Did podcast, I put a more bullish model out as well. I actually had the bullish model first, but I didn't want to put it out because it was kind of like, for the reasons I already explained. It's better to be wrong, to the upside as to the downside. So, but yeah, I think both models, have are valuable in a way. I think they are reasonable to. But actually, a liquid supply is even outperforming the most bullish model at this moment. So we're going even at a rate faster, which I don't know. Like, to me, that's kind of insane. But that shows again like how strong this conviction is of HODLers. And to get back to your point of saving, I mean. Yeah, to me, it is insane that we have to use real estate as a savings account, right? Like, I mean, it is really, it shows how bad our money is, like a normal savings account doesn't make any sense, like, and it's actually so unfair in the world because only like rich people can afford real estate. And so if you're trapped, renting, you're in this trap, you cannot get out of it. I mean, try to save money in a bank account. You cannot put it in real estate because it's too expensive. So you save if you save in a bank account, or you have to take all kinds of risk, like putting your money in stocks, and so we're kind of forced to do all this because of the bad quality of our money. And I think Bitcoin really solves this and makes saving possible again. And to me, I think, it's such a more healthy system, if we're just able to save and instead of always taking out credit because otherwise you cannot benefit in the system. I'm very, in that sense, I'm extremely bullish on Bitcoin. And if I look at the growth rate and also just the price in general, I mean, Bitcoin couldn't really have done it much better in the last 14 years, in my opinion. Maybe we had a little bit of a disappointing cycle, because people were expecting 100K, prices above 100K last cycle. But yeah, you have to think that my explanation for this now, why we didn't reach those prices, is that first of all, we had a lot of paper Bitcoin, so futures options became part of the game, and so people started trading those instead of buying actual spot, and so that didn't have as much effect on the price. Next to that, we obviously had things like Terra and FTX, which they pretended to have a lot of Bitcoin, but they didn't. So people were trading on those platforms thinking they were holding Bitcoin, but they actually didn't. And so there were obviously that didn't last long, and I'm it's good that they crash. The earlier the better. But yeah, so we had, and then the third point is that we had. Bitcoin was actually the least scarce in its history, at least according to the model I made here. So the available supply, if you think of the available supply, we started that bull market with at least scarce Bitcoin in Bitcoin's history. And so it's not that strange that with such an abundant Bitcoin that, this cycle was a little disappointing. But the next cycle, yeah, we should have a more scarce Bitcoin, as I said, more equal to 2017. And so, I'm very excited to see how Bitcoin is going to perform there.
Yeah, I mean, it's almost like the past cycle, like you said, Bitcoin was like the least scarce. There was the most abundant in Bitcoin terms amount of Bitcoin out there available for trade. It's almost like it was, like the bull cycle occurred. Obviously, more dollars had to come in, more adoption from El Salvador, from MicroStrategy, from Elon or whoever. More dollars came in, but they were also bidding literally for more Bitcoins, and so it makes it even harder to like you said, go on like a even larger parabolic bull run. But like next cycle, as you're pointing out, it's like, okay, there's less Bitcoins available, so maybe potentially if like the same amount of dollar buying pressure came in, if I'm looking at them as like flows kind of, maybe the price can go higher with like even the same dollar demand. I don't know if I'm thinking about that, like obviously up for debate, but it's interesting how like when holders like control a large portion of the market and a growing large portion of the market, I feel like there doesn't have to be as much demand for them to be like trading the small amount of coins circulating, and that could really just send the price higher. And then of course, if we do get a massive wave of demand that was significantly larger than the past cycle, then it could be truly insane. Hey everyone, this week I want to talk about Stampseed. This is very cool metal plate where you can literally stamp your Bitcoin seed phrase with this hammer that they sell you into this metal plate. This is a must-have for all Bitcoin holders. If you have taken self-custody of your Bitcoin, you want to make sure you've recorded your seed phrase on something that is fireproof, waterproof, and time resistant. This is a great product for Bitcoiners who have taken self-custody and want that extra level of security and resiliency to store their Bitcoin. So if you are interested in this product, definitely check out stampseed.com. Use code Blockware15 for 15% off the entire website.
Exactly. And we see that one of those demand waves that come in, they only happen every 4 years, once every 4 years. And they typically only last for like 6 months to a year. And a way to measure that, I really like to use the short-term holder supply. So I think the short-term holder supply, it's such a simple metric in a way, but it just shows all the transactions on the blockchain that are younger than 5 months. So it really gives a recent view on the market. And if we look at that supply, we can see clearly those peaks, how they correlate with this exponential price movement. And because they're, so to me, short-term holder supply is really one of the best proxies for new demand that is coming into Bitcoin. And we see typically one of those peaks occurring every 4 years. And so here we kind of come a bit to the psychology of the market. Bitcoin plays out over this 4-year cycle. And we typically need, it starts with a halving. So we have kind of this supply shock. Maybe it's also a bit of hype around the halving these days. The supply shock obviously is less intense every halving. But there's a lot of hype around the halving as well. But the halving always has served as this catalyst for a true bull market in Bitcoin. And then we have like this hype coming in, and that typically lasts only for like 6 months to a year, and then we peak, and obviously when that hype is gone, it's not going to come back, right? Like so, because price overextends, and so we return kind of to the baseline. And so people get scared. Once the price starts dropping, people get scared, and so when hype is over, it doesn't come back, and it takes a long time again to build up, because first we have this downside, a year of downwards price movement, and so that kind of takes a year, to get this kind of 80% drop, but obviously we end up at a higher price, and then we get kind of like this 2-year recovery phase, so from the bottom to the previous all-time high, so in this case from 15K to 69K, it's historically this recovery took about 2 years, and so currently we're only 6 months in, and we're around 30,000. So I think we kind of doubled from the bottom in those 6 months, and we still have a year and a half basically to go to recover the rest. And so I think we're really right on track, and it's really in line with previous cycles. In the last cycle, in this period, we actually had this phase where we went from the 3K bottom up until 14K. That was in 2019, so four years ago, and there we actually we had like this mini bull market, after this bear market, but it was not really sustainable. There was a bit of new, short-term holders coming in, but it was not as excessive. There was like a small a small peak in short-term holder supply, but it was not nearly as great as a true, full-grown bull market. I think that was the phase with Libra and stuff. So maybe there was also some new people coming because of that. But it was not sustainable yet, because we just had this bottom, and it was like too early. The recovery really, and here we get to this human psychology. Apparently, we need like 2 years of kind of recovery, of build up, and before people get excited again. And so and usually this excitement comes again when price starts hitting that previous all-time high, right? Then the media starts waking up, everyone starts making up, and like it was not a tulip bubble again, so it is. So I think it seems really that the same pattern is again going to play over, so at least we're right on track. So I think that is just amazing.
Agree. It is weird how the cycles keep repeating pretty like in the same order and like the same fashion. I wanted to ask you about this. Looking back at the 2020-2021 cycle, I know I've heard people talk about how like spring 2021 was like the true peak, maybe from like an on-chain perspective, and then like November 2021 was a higher dollar price, but it was if you're paying attention, like it was
Yeah.
already like kind of over at that point. What's your perspective there?
Yeah, I fully agree there. I actually put that out back then, and it was picked up by several news articles. But yeah, you could clearly see that the spring peak actually coincided with the short-term holder peak as well. Short-term holder supply was actually had a huge increase there, and then it just faded out. But during that second peak, that was actually based on long-term holders, and to me, actually, again, that it's a thing that is so bullish. We were actually able to make a new all-time high based on this HODLer group, right? Like that is kind of insane, for the first time in Bitcoin's history that happened. And that happened still at a relatively abundant Bitcoin, I mean, we were already during the bull market, Bitcoin scarcity kept going down. Obviously, that new demand took a lot of coins. So scarcity was going down during that whole year, but we were not near at 2017 levels yet in terms of scarcity. Yet Bitcoin was able to make an all-time high. Like it was barely an all-time high. It was, I mean, you could more see it as a double top, right? But the fact that we did that again shows to me how strong this HODLer group already can be, and so currently. I think Bitcoin is a lot more scarce, but that there's no real hype around the HODLer group currently. Like that was really a phase because everyone was expecting 100K price. HODLers were like stacking like crazy, or like they were really thinking like still like no, there's still something gonna happen, but it didn't come. So actually on chain that was already visible. Because short-term holder supply already faded out, and so there was no reason to expect prices to really go up just based on these long-term holders. And so yeah, I fully agree with that. To me, it's very bullish. I think with a more scarce Bitcoin, and then if bullish sentiments comes back with the short-term holder, and we even get new demand peak coming in, I think prices. Therefore, to me, it seems reasonable to expect higher returns possibly than the last cycle.
I agree. Actually, it makes sense. I hadn't quite thought about that. The second half of 2021 was kind of like a bullish sign for Bitcoin. Like the fact that it was able to do that after a lot of the hype had gone away from like the true peak, it's pretty impressive. I guess going off of that though, we had the dark, treacherous 2022 bear market fell all the way to, 15, 16K. I guess why do you think, other than like just the hype going away and the natural cycle of Bitcoin, why do you think we had the bear market we had and saw 15K?
So I mean, when price extends like too much, we have to get back to the baseline, and so I think it's just natural that we get these crashes, and we didn't necessarily have to reach 15K. I mean, the bottom could have been higher if it wasn't for the events that played out, but I like to think, I mean, there is the state of the market kind of, and there are news events, and it depends kind of at which state we are in the market, which news events do well or do not as well. So, but what I'm trying to get at here is like, so if price, so I like to look a lot at the short-term holder cost basis, which is like the short-term holder average price. It's one of the best on-chain indicators in my opinion, because it has this, short-term holders have this recent view of Bitcoin. Their average purchase price is really a good indicator of what we can expect of Bitcoin. So if we're trading below that average price, you could call that a bear market, and if you're trading above that price, you could call it a bull market. And so if you extend like too much above that, if short-term holders, if the Bitcoin price is too high above the short-term holder price, it actually means that short-term holders are in a lot of profit. They have a lot of profit, which is usually like unsustainable. That's why you, in a bull market, you see kind of waves above this short-term holder price, and price tends to reset again on that short-term holder price, and then you get another wave above it, and again you reset, and that continues a few times. And but obviously also that short-term holder price is kind of during a bull market, that short-term holder average price that starts rising, and so and we keep on making profits above, and at some point that becomes unsustainable, right? Like because we cannot, only go up, right? So then we get obviously a rejection. Now during a bear market, it like, as soon as you go below that short-term holder cost basis, because it's unsustainable, then suddenly those short-term holders are at a loss, and that's when fear starts to set in, and all these emotions come, and we can clearly see then. Usually that's why in the 4-year cycle, and I have some spiral charts on this actually, where you can clearly see like that there's a lot of red colors, a whole year basically of losses for those short-term holders, and so there's a lot of emotions there that are part again of that psychology in the cycle. And then there are obviously, when price starts going down, this caused all kinds of things, all kinds of events, like for example, people that were trading paper Bitcoin, they found out that they actually didn't have the asset, and so some of them went bankrupt, and so that caused a lot of more fear. And then you see those capitulation events, and we had we had a whole cascade of those obviously, but with FTX kind of being the last one, but an extreme one, right? Like if it wasn't for FTX, maybe we wouldn't have reached 15K. Maybe we would have stayed a little higher even, if there would have been another waterfall effect, then we would have had even something worse than FTX. We could have reached 10K, so, but interestingly, on the 4-year cycle basis, those events that happened, they cause because usually the Bitcoin price consolidates a little bit, and then with one of those events we really had like a really steep drawdown, and then again we would consolidate a little bit, and then FTX happened, and we even went another level lower, right? And so, but the bottom really happened around around this exact moment in time as the previous cycles. And so to me, it was kind of clear that, these capitulation events are quite rare, and they're really visible on chain, because a lot of Bitcoin suddenly starts moving hands. And to me, like the distribution of supply actually started looking very similar during that final capitulation of FTX. We had such a big capitulation event. Like if you look at the amount of supply that changed hands just in that single day, it was very similar to the bottom of the 2018 market and of the previous cycle. And so I think to me it was kind of clear, like, okay, we could have had another cascade or something else, but I couldn't really imagine again some event equally as intense as the FTX event. So to me it was kind of like reasonable to expect that was a bottom on both on a 4-year cycle basis and in terms of like really true capitulation that we saw on chain.
Yeah, in hindsight, it's pretty clear, pretty obvious that was the bottom. There's so many signs pointing to that. I also think it's like those capitulation moments where there's actually a decent amount of coins exchanging hands when the price is really low. I agree. It's honestly like a very bullish sign, because like who was buying Bitcoin at 15K, end of last year? Like crazy people that are not going to sell anytime soon. Like they have very strong balance sheets, probably, have an income, like a solid income statement, a solid job, making money. Like if you're buying Bitcoin in size at 15K after it's fallen like 70, 80%, like you're probably not just like buying it and hoping it goes up 10%. Like that's getting sucked into some probably pretty strong hands.
Exactly. Yeah. I think the long-term holders, but they notice. We have seen, if you've been in Bitcoin several cycles, to me, this cycle, I mean, even though we had this 80% drawdown, I wasn't really emotionally affected by it. It's never fun to see because, I also have a decent amount of Bitcoin that I won't sell ever, and it's not nice to see that go down 80%. I can be honest about that, but it was definitely also not, I slept like a baby, let's say, through this whole bear market. After seeing several cycles, you kind of get the confidence, and I think this is all part of the psychology. You cannot have a new asset and go up in a straight line. There is volatility along the way, and it happens in these cycles, and there's a lot of emotion and speculation, and I think that's all normal, and I actually have no reason to believe that would not continue, because Bitcoin couldn't have done better in the last 14 years, honestly, and so why would it stop, right? Even if, and I like to sometimes think in that way, even Dogecoin or something like a coin that really has no real fundamentals or anything. I mean, I even expect because it's Dogecoin even will be pumped at some point in the future. I expect it to be. I'm not a fan of Dogecoin at all. I'm more Bitcoin maximalist. But even Dogecoin, I expect to have a pump in the future. And then there's Bitcoin with all these fundamentals. Why wouldn't it? I'm very confident that we will again see an inflow of new demand, and that this pattern will still continue.
Yeah, I mean, in my experience, it's like the first cycle, you're kind of like, after it falls 80%, you're like, wow, this, maybe I'm missing something here, and then obviously, it goes back up. But then this cycle, I never really was like, dang, like maybe we're wrong here. It's like, this is kind of par for the course, nothing too crazy here. But crazy. One last big question I want to ask you before we wrap it up. You have an interesting chart comparing the price of Bitcoin to global liquidity. How do you think, macro and global liquidity plays into like the role of Bitcoin cycles? Like, is it mainly halvings? Is it mainly macro? Is it like a healthy combination? What do you think?
Yeah, so I think at this stage in the cycle, Bitcoin is kind of correlated to, I mean, it's seen as a risk asset, right? I think I see that as a stage of Bitcoin, that it's a phase that we're in currently, and we cannot do anything about it. Obviously, Bitcoin is volatile compared to, for example, the S&P or something. So or even the S&P obviously is a risk asset in terms, So I think the fact that Bitcoin now can be part of a portfolio of a normal business, that is already an amazing achievement, kind of. Like a few years ago, that was still kind of unthinkable. We can really see that since 2020, we had kind of an inflow of institutional demand as well, and it wasn't maybe as crazy yet, but the fact that people now kind of accept that it can be part of a portfolio, that's already a wonderful achievement for this cycle. And so it's a phase that we have to go through, obviously. So people now see Bitcoin in the traditional world. I'm saying in TradFi, they see Bitcoin as a risk asset, but they still would like to have it as part of a portfolio, right? They don't fully understand Bitcoin. And so obviously that's a phase. So in the next phase, I expect at some point to decorrelate from that, so that Bitcoin indeed becomes more like the safe haven and digital gold. And so the question is, how long is that going to take? Like currently the correlation with the S&P is high, in my opinion. And so we have to see what happens in macro. I mean, Bitcoin didn't really go through a recession yet. We've been talking about a recession for a long time. Is it here? Is it not here? I don't know. I cannot really predict. I cannot really predict the future, but I wouldn't be surprised if we still see a recession. And so the question is, okay, will Bitcoin remain correlated to the S&P, or will it be seen like as a safe haven? And I mean, eventually it will be a safe haven, in my opinion. But the question is Bitcoin mature yet, enough yet for it to be already relatively soon, let's say in the next year? I think there is a fair chance, but we will have to see how Bitcoin responds to such a situation. Now, in terms of global liquidity, yeah, I mean, liquidity in general is extremely important in the macro landscape. I mean, if we think of the S&P, also if we have, if there's a lot of liquidity available, in general, those assets tend to do better, right? Like so. So I think that's true for Bitcoin as well. And so yeah, I think currently global liquidity is an interesting metric, although there's not like a one-on-one correlation. Like if global liquidity goes up, Bitcoin has to go up. No, yeah, it's not as easy as that. Also, the data that you get from global liquidity is a bit lagging. I mean, we can look at interest rates and their if they're rising, yeah, M2 in general will go down, and we've kind of had a reversal now with the pause that we had. So to me, again, it looks like, eventually, obviously, fiat money will be printed to infinity, so we can expect that. But during the phases where actually liquidity is decreasing, it's a bit more problematic for risk assets. And since Bitcoin is currently correlated to risk assets, yeah, it's not that good for Bitcoin either. Now, the question is, like, when will we decorrelate? It could happen in a recession. I do think if we get a true recession, that actually Bitcoin could decorrelate from the S&P. Although people also don't know anymore where to go with their money, right? Like, so bonds have had negative yields, and so it's like, where do you store your money? Like, it's not as easy, it has to go somewhere. And I think also that's why the stock market is going pretty well, like better than many expected, is because, like, where do you put your money? Yeah, I mean, if you don't really know, I mean, Bitcoin is the risk asset for a lot of TradFi. So yeah, why not store it? Better maybe store it in Apple or Google. Like, it's probably more safe than put it anywhere else. And so even though that comes with a lot of risk as well.
Yeah, I think those were some great points. I guess we can go ahead and wrap this up. This was a really good conversation. I think my key takeaway from seeing your charts and listening to you is, people out there may be underestimating Bitcoin's ability to go on another pretty crazy parabolic bull run, maybe larger than the previous bull run, which I feel like almost no one is really expecting, which is pretty interesting. Root, this is awesome. Thanks so much for coming on. Where can people learn more about you or your research or see some of your charts?
Yeah, thank you so much, Joe. Yeah, so you can find me at bitcoinstrategyplatform.com. I actually started a newsletter also back in May, and so that's through Substack. So it's bitcoinstrategy.substack.com. But if you go to bitcoinstrategyplatform.com, you can subscribe to the Substack newsletter as well. And if you subscribe to the newsletter, you get also access to the platform and to my live indicators. So that's where you can find me. Thank you so much, Joe, for having me on. It was a nice conversation. Happy to be back on sometime in the future.
100%. We'll definitely have you back on. This was awesome. Thanks, Root.
Thank you.